Most people only started talking about AI when ChatGPT hit the scene in late 2022. But what if I told you you've been using AI for years, long before it was the buzzword it is today?
That's right. At AIQ, we've been quietly building and refining our own AI systems for years. They're not flashy, but they're incredibly effective for us.
And today we're going to show you how that AI actually works inside our investment process. Hey everyone, I'm Brandon Day, and I'm here with Nick Moore, Director of Trading and Alternative Investment Research here at AIQ.
Thanks for having me. I'm excited to share a behind-the-scenes look at how we've been using AI to stay ahead of the curve for our clients.
Today's conversation is all about how we use proprietary AI tools to cut through the noise, find quality investments, and stay grounded in facts, not fear. So Nick, let's start with the backstory. This AI system didn't just pop up overnight, right?
No, not at all. It's actually began in the 1990s with a group of data scientists that we still work with today. They were building early stage financial AI long before it was popular.
I believe it was around 2018 when Jean-Paul Lagarde, our CIO, really started to shape it into something we could use internally?
Exactly. It was 2018 when Jean-Paul joined forces with those data scientists I mentioned to customize the system for our investment approach. And by 2021, it was fully integrated to our daily processes.
So what does this AI actually do?
Well, Brandon, at its core, it analyzes quality. It looks for both sectors and individual companies through dozens of different quality metrics like earnings consistency, debt levels, and price strength.
And beyond improving accuracy, it brings real efficiency too, right?
Absolutely. For example, for one of our stock strategies, we start with 1,000 largest companies in the US markets, and our quality AI narrows that down to about 250.
Why start with quality?
Quality companies don't just perform well, they tend to hold up well during market drawdowns.
So then what happens after you've narrowed it down to 250?
Well, then they flow into our crowd behavior AI, which looks for names showing strong, persistent strength and narrows that down to about 100.
Okay. And is that when we add the human touch?
Exactly. So that's when we use what we call our IQ lens. That's when we get our hands dirty, roll up our sleeves, and do old school research. We look at those earnings reports and model things out for the next 3 years. From
there, about 75 names make it to the investment committee, is that correct?
And ultimately, we choose about 50 to put in our portfolios.
Okay. That's an incredibly disciplined process and helps you stay clear-headed even when markets get messy, right?
Absolutely. When markets get noisy, whether it's a government shutdown, a tariff scare, or a shift in sentiment, our AI helps filter out all that emotional clutter. It doesn't get rattled or reactive. It instead just stays focused on the data.
And that includes spotting risks others might miss?
Yes. Sometimes the data flags issues that aren't really obvious to the human eye. That alone can help us avoid costly mistakes.
So to be clear, AI doesn't replace the investment team, it supports them?
Right. The AI is like a second set of eyes. It gives us a data-driven edge, and we still make the final calls.
So bottom line, the future isn't about AI replacing people, it's about people using AI wisely.
That's how we view it, AI-powered, but human-led.
In our next video, we'll break down a real-world example where our AI spotted a trend early and how the insight shaped our investment decision.
That one's going to be good. Make sure you tune in.
Love it.
Thanks for watching. And if you've got questions about our process or AI investing, feel free to reach out.